Cracks may be starting to form for so-called Abenomics, not helped by protectionism in the US. Japanese Prime Minister Shinzo Abe launched his pro-spending policy in 2012, combining loose monetary policy and fiscal stimulus to kick the economy back into its glory days. But increased fears that global trade tensions could escalate made both Japanese corporations and consumers reluctant to spend in this year's first quarter. And that dampened sentiment is playing a big role in derailing the country's growth. Japan's annual GDP growth shrank 0.6%, which was wider than expected. That contraction was driven by a drop in corporate investment, the first time it's fallen in 6 quarters. A fall in shipments of mobile phone parts and factory equipment contributed to slower export growth. And a colder than usual winter was blamed for a spike in food prices, causing sluggish domestic consumption. Consumer spending in Japan is largely driven by the pace of wage increases. And analysts say companies are not hiking wages fast enough, despite recording healthy profits. But the government says the underlying economy is improving.
We believe in spite of the contraction of the economy, the trend of recovery and growth is unchanged.
Analysts agree, with some calling the contraction a one-off event, but raise the possibility that it could lead to a slower pace of growth in the long term. The data could make Japanese lawmakers hold off implementing a sales tax hike next year from 8% to 10%. That tax hike triggered a slump in consumer spending in 2014, which tipped Japan's economy into recession. It's managed to bounce back from that, but Abenomics could find itself having to tread more cautiously to stay on the path of growth. Laila Humairah, TRT World.
Dr. Seijiro Takeshita is the Dean of University of Shizuoka's School of Management and Information. He says corporate investments are a weak spot in the economy.
We would like to think it is a blip, and if you look at the internal factors, it could be a blip, very much so, particularly considering the fact that, as you reported earlier, private consumption is not necessarily at a bad trend. And we also had the negative issues about wearing off of this housing investment because there were changes in inheritance law. But these technical issues are obviously blimp. But there is definitely a very big worry that's emerging on capital expenditure, which is corporate investments, considering the external factors that we're seeing, which had been steered by President Trump of the United States, not only against China, but also with the rest of the world, and heavily involving this time around the Europeans, which could lead us into a continuous swirl of protectionist measures, which could flare up into trade wars. The Japanese companies tend to have a very high risk avoidance tendency, and if they smell any negativities, particularly in regards to like trade friction, along with the fact that geopolitical factors are becoming more complex in the Middle East, meaning that the oil prices are rising. And if these things happen, what tend to happen is flight to quality and currency, which means the yen is going to strengthen. So you will have a triple negative whamming. And if there is any sign of that, a smell of that that's around in the air, then obviously the Japanese company has a tendency to withhold their investment.